Welcome to The Explainer. Today, we're uncorking the latest financial results from, well, one of India's most famous brands, Sula Vineyards. We're going to give their Q3 numbers a thorough financial health checkup.
Yeah, think of it just like that, a financial checkup. We're going to take their official quarterly report, which they just put out on February 6th, 2026, and basically treat it like a patient's chart to really see how Soul is doing. All right, so let's get right into it and start with the headline diagnosis. It's the first question absolutely everyone asks when they look at a financial report. Did the company actually make any money? So, here's the big number, the bottom line. For the quarter that ended on December 31st, 2025, Sula Vineyards reported a net profit of 9.10 crore rupees. But, as we all know, a single number, well, it rarely tells the whole story, does it? And this is where things start to get really interesting. See, while that 9.10 crore profit is a nice little jump from the last quarter, it's actually a huge drop from the same time last year. So what's going on here? Is this a sign of trouble, or is there something else at play? Right. That drop compared to last year, that's really the central puzzle of this whole report. To figure out why that happened, we've got to look closer at the company's vitals. The money coming in versus the money going out. So let's do that. Let's check those vitals. We're going to dig into the very core of Sula's business for this quarter, the fundamental flow of cash that really decides if they're profitable or not. At its heart, it's pretty simple math. On one side, Sula brought in a total income of almost 197 crore rupees. And on the other side, their total expenses came out to just over 182 crore. The gap between those two numbers, well, that's what gives us our profit. This chart here gives us a fantastic breakdown of where all that money went. The biggest slice, changes in inventories, that's all about the cost of actually making and storing their wine. Then you have marketing and distribution, which, makes total sense for a huge consumer brand like Sula. But here's the thing, none of these expenses look crazy or out of the ordinary. So the real reason for that profit drop has to be hiding somewhere else. And that's the crucial point here. These big top-line numbers, they're only part of the story. To really understand the company's health and figure out why that year-on-year profit drops so much, we have to do what all the good analysts do. We gotta read the fine print. Okay, and this is where we get the context straight from the source, from the boardroom itself. The notes that come with these financial statements, that's where the real explanations are. And Sula's report gives us two really important clues. So clue number one comes directly from Sula's board. They're basically telling us, hey, our business is seasonal. And when you think about it, that makes perfect sense, right? Wine sales are going to spike during holidays and festivals, and the costs go up and down with the harvest. So comparing this quarter to the exact same one last year isn't really an apples-to-apples comparison. It's kind of like comparing a massive festival season to just a regular one. All right, the second big clue that helps us understand that profit number is hiding under a special heading in the report. It's called an exceptional item. And whenever you see that, it's usually a big sign that there was a one-off event that doesn't really reflect how the business runs day to day. So what was this exceptional item? It was an impairment loss. Now, that sounds super complicated, but it's really not. Imagine this. You buy a vintage car for a certain price, but a year later, its market value just drops. Now, you haven't actually lost any physical cash, right? But the car's value on paper has gone down. That's basically what Sula did here with some of their assets, like brand names. It's a write-down on paper, not cash out the door. And how much was that write-down? 1.70 crore rupees. This one-time loss was subtracted from the company's earnings, and that directly pushed down the final net profit number we saw right at the start. So if you take away this one-time charge, the profit would have actually been higher. Okay, so we've got seasonality, we've got a one-off accounting charge. With all these moving parts and technical terms, it's totally natural to have a little skepticism. I mean, how do we really know this financial report is accurate and gives us a trustworthy picture of the company? Well, that's exactly where the independent auditors come in. See, every publicly listed company has to get a second opinion on its financial health report, and that's the super critical role these outside firms play. For this quarter, Sula's books were reviewed by a firm called Walker Chandiuk & Co. Now, their whole job is to comb through the financials and give an impartial verdict on whether everything is presented fairly and accurately. And here it is, the key line from their final report. Now, this is total auditor speak, of course, but the message is really clear. They're saying that after doing their review, they found absolutely no red flags, no reason at all to believe the financial results are wrong or misleading in any significant way.
In the financial world, this is what you call a clean bill of health, the auditor's seal of approval. It adds this really powerful layer of credibility and trust to the numbers Sula has put out there for everyone to see.
So, what's our final diagnosis here? Well, while that headline profit number might look a little weak at first glance, our checkup shows that Sula's underlying financial health is actually quite stable. That profit drop really comes down to seasonality and a one-time accounting adjustment, not some deep, fundamental problem with the business. And hey, the auditors have given them a clean bill of health. But the big question remains, will the next harvest bring a richer return for Sula? Or are there maybe some storm clouds gathering on the horizon for the Indian wine industry? Now, that's a question we'll be keeping a very close eye on.